So this is a headline that I saw coming. The popularity of EVs is causing a major shortage of batteries. If you want to be in the know, be sure you subscribe and turn on notifications. Hey there, Dave here. Welcome back. Taking a little break this week from the nifty NFTs, which, by the way, if you were one of the lucky people who picked up one of the 14 Crypto Daves that I gave away for free during the last episode, congratulations. I saw that they're already bidding as high as $100 each. That just blows my mind. But we're not talking NFTs today, but we are talking about a different popular abbreviation. We're talking EVs, and particularly ones that go public by SPAC, companies like CCIV, and how booming business for EVs is causing a major shortage of batteries. Tesla is without a doubt the king of electric vehicles and well-positioned for the future of sustainable energy with its vertically integrated systems. But who are the other players in the EV space that could possibly follow the same growth trajectory as Tesla? Today, we're looking at a couple of candidates for the next home run investment in electric vehicles. NIO and Lucid Motors are fan favorites of investors hoping to find the next Tesla. NIO seems to have a tight grip on the market in China, and Lucid is charming investors with its sleek designs and big ambitions for production, and there's no shortage of potential with these companies. So let's take a deep dive into both NIO and Lucid and see what all the hype's about. First up, it's NIO, which is quickly making a dent in China's premium electric vehicle market. People are calling them the Tesla of China. The optimism clearly shows in the stock price. NIO traded at just $4 a share in March of 2020. Since then, it's up around 1,400%. So is it too late to hop on the bull train? The expectations are certainly high, and whether the value is appropriately reflected in the stock price is up for debate. What's not up for debate is the growth in deliveries and production for NIO, and the rapidly expanding electric vehicle market in China, the largest auto market in the world. NIO could just be getting started. It was founded in 2014 and began deliveries of its first EV, the ES8, in June of 2018. NIO has launched a couple of different vehicles since, including the ES6 SUV in December 2018 and the EC6 Coupe in December of 2019. Most recently, the NIO ET7, which is a smart electric flagship sedan and NIO's first autonomous driving model, was officially launched in January. Part of the reason that investors are so excited is that vehicle delivery growth has been astronomical. NIO delivered 7,225 vehicles in January 2021. That's up 352% year over year. That was a new monthly record. And as of January 31st, 2021, cumulative deliveries of the ES8, ES6, and EC6 reached nearly 83,000 vehicles. Unlike some EV companies that went public by SPAC and are getting a ton of attention from investors, NIO actually generates revenue. In Q4, NIO delivered revenue that increased more than 100% compared to the quarter from a year ago, and they're forecasting 20,000 plus deliveries in Q1. Another reason that investors are so optimistic about NIO's upside is its penetration into the world's largest auto market, China. In 2020, China's EV sales rose 12% to 1.34 million vehicles. Global EV sales rose 43% to reach 3.24 million units for the first time, and China's global market share increased from 2.5% in 2019 to 4.2% in 2020. A lot of numbers there. I'll do the math for you. That means 41% of all EV sales came out of China. Before we move on to Lucid Motors, a quick word from our sponsor today, the like button. You know the like button. What's not to like? Go ahead, tap it today. That was dumb. Now moving on to Lucid Motors, which has to be the most hyped SPAC of them all. There is something special about this one.
There's so much to unpack with this SPAC, man.
After much anticipation, Lucid Motors is finally publicly traded following a merger with Churchill Capital. That's a SPAC operating under the ticker symbol CCIV. Once the news came out that the deal was confirmed back on February 22nd, shares dropped as much as 50% within days, and they've headed even lower since. So why was there such a dramatic drop? You would expect the stock to go up, given the cult-like following that's developed among retail investors. Lucid also announced that the rollout of their first vehicle is delayed, blaming COVID testing activities and supplier availability due to the pandemic. The company's now aiming to begin production in the second half of 2021. Before the collapse, the stock had skyrocketed in a speculation-fueled frenzy leading up to the announcement. On January 11th, it was rumored that Lucid and Churchill were in talks. Shares of the SPAC had grown by more than 5 times their original price of $10 a pop. So what's all the hype about? Investors are betting big on Lucid's one and only electric luxury sedan, the Lucid Air. Lucid's big production plans hinge on the efficiency of its new factory in Arizona. The company expects to produce 7,000 units in 2021 and eventually ramp up to 34,000 units a year. It's expected that eventually, at its peak, the factory will have the capacity to produce 400,000 cars a year. The first version of the Air is called the Dream Edition, and it carries a hefty price tag of $169,000. The next model in the pipeline is an SUV project called Gravity that's expected to be rolled out in 2023. It seems like every investor who's taking a chance on an up-and-coming EV company is hoping to get in early on the next Tesla. Lucid's current CEO, Peter Rawlinson, was Tesla's chief engineer in 2011. He led the design of the Model S, so he knows a thing or two about crafting a winning EV. The upside in the electric vehicle industry does seem to be almost infinite, but with expectations through the roof, the margin for error is slim, and one risk factor I'm keeping an eye on is a battery shortage. And also supply chain issues for raw materials such as lithium, cobalt, and nickel. It's an issue Tesla, Ford, General Motors, and Morgan Stanley have all warned us about. Elon Musk has said the fundamental limit on electric vehicles right now in general is total availability of cells. And over at Ford, the CEO is saying that as the company ramps up manufacturing, it has to secure supply so we don't get into a situation like we are in chips. The US has no shortage of lithium, but it is expensive and difficult to mine. From a sustainability standpoint, that sort of defeats the purpose of EVs. And when it comes to battery production, the US is extremely dependent on China. The US only has 3 battery factories, 6 more are planned, but according to a minerals research firm, at least 30 are needed by 2030 to meet EV demand. Let me know what you think about the battery supply and materials and Tesla competitors like NIO and Lucent. Are you invested in either, neither, both? Let me know down in the comments. I'll reply to as many as I possibly can. And that is the latest from here. I'm Dave Hanson. I'll see you back there for the next Hey There, Dave here.